January 1st, 2027. That's the exact date the U.S. government cuts every Chinese rare earth material out of every defense system in America. No waivers, no exceptions. And right now, while defense stocks are hitting new highs, almost every rare earth stock connected to this deadline is sitting in the red. Welcome back to Wealth Signal. Today, we're breaking down the one material powering both the AI boom and the defense boom at the same time, and why the market has almost completely forgotten about it. Here's the thing nobody's talking about. Defense earnings are exploding. Big tech capex on AI is at record levels. But the one input both of these stories depend on, rare earth materials, has quietly lost almost all its retail investor interest. Stocks that were hot a year ago are now down, ignored, and ready to be forgotten. By the end of this video, you'll understand exactly why this sector went quiet, why the government is now forced to step in, and why one specific date in a few months could flip the entire story upside down. Stick with me. This connects to almost everything in your portfolio, whether you realize it or not. Rare earths aren't optional. You cannot build a single drone, a missile, or an F-35 without them. If China cut off all rare earth supply tomorrow, the U.S. couldn't sustain a war for more than 2 or 3 weeks on existing inventory. That's not an opinion. That's the raw math of how thin the supply chain really is. It's the same story with AI. Energy systems, motors, even GPUs rely on magnets made from rare earth materials. Nothing in this world runs without a motor, and nothing runs a motor without magnets. So when people talk about the AI race, they're really talking about a rare earth race too. Most just don't realize it yet. So why did the U.S. fall behind? Back in the 80s and 90s, America actually produced most of its own rare earths. Then we decided the process was too dirty and too manual, and we handed the entire industry to China. We even trained them how to do it. Today, China processes about 90% of the world's rare earths. That control isn't just about supply, it's a weapon. Every time the U.S. talks about new tariffs on China, one of the first responses is a threat to cut rare earth exports. That single move is enough to bring any administration back to the negotiating table. Whoever controls the material controls the leverage. Rebuilding this from scratch will take the U.S. an estimated 10 to 15 years, even at full speed. And it's not just America. Europe, Japan, Korea, and India are all racing to build the same domestic capability, because every major economy has realized the same uncomfortable truth. Dependence on one country for a material this critical is not a stable position. None of this rebuild happens without government support. That means floor pricing to guarantee company revenue, debt financing to scale up facilities, and direct equity investment. And here's the important part. It's all milestone-based. Companies only unlock funding when they actually hit production targets, not just because they made an announcement. This isn't a partisan issue either. The G7 recently agreed on the same kind of measures for Europe, and in the U.S., this push has continued, regardless of which administration is in office. When a resource is this essential to national security, funding tends to survive election cycles, which lowers the policy risk for anyone watching this sector. If you know someone holding one of these stocks and confused about why it's still down, send them this video. The reasoning here might completely change how they see their position. One company at the center of this story is Real Alloys. A year ago, it existed only on paper. In 12 months, it acquired one of Canada's top 3 heavy rare earth mines, partnered with an established processing facility, and secured supply agreements to feed its production pipeline. Also listed on NASDAQ, raised over $150 million across 2 rounds, and secured a letter of interest worth $200 million for its next production phase. The board includes a former U.S. Army 4-star general and a former Canadian ambassador to the U.S. Heavy defense and government credibility built in record time. The reason this matters for retail investors isn't just the speed. It's that the company focuses on processing and metal making, not mining. According to a recent International Energy Agency report, mining isn't the real bottleneck in this industry. Processing is, and that's exactly where the supply gap sits. Now here's the deadline that changes everything. Starting January 1st, 2027, no defense system in the U.S. can use any Chinese-origin rare earth material. Full stop. The White House confirmed this again with an executive order in July, and it's been reinforced with monthly reminders. No more waivers this time. That means every defense contractor in the country needs a domestic or allied source, and they need it now, not in 5 years. Companies that can already produce and supply at scale are sitting in exactly the position defense buyers are desperate to find. It's not just defense driving new demand either. Humanoid robots use between 3 to 5 kilograms of rare earth magnets each. Drones use smaller amounts, but at massive volume. None of that supply chain exists yet in any meaningful way. It's demand that hasn't even been priced in. And the pricing gap is real. Heavy rare earth metals sold in North America can go for 3 to 4 times the price set by China's controlled Asian Metal Index. If you can produce and sell domestically, that price difference alone can make a facility profitable, even before accounting for government support. So here's the full picture. A sector everyone forgot about, sitting on a supply-demand gap that isn't closing anytime soon, backed by bipartisan government funding, with a hard legal deadline just months away. That combination is exactly why this space could look completely different by the time January 2027 arrives. If this changed how you're looking at the sector, hit like. It genuinely helps this channel reach more people who need to see this. Before we move on, everything I've referenced visually in this video is saved as a downloadable summary file in our Wealth Signal Telegram channel, along with every past and future videos file. Links in the description. Go grab it. Now I want to hear from you. Are you watching this sector, or did you already write it off? Drop it in the comments. If you're new here, subscribe. We cover market moves like this every week, before most people are paying attention. And if you want the visual summary file for this video, join the Wealth Signal Telegram channel. Link is in the description. Next week, we're digging into another name most investors have already dismissed, but the numbers tell a very different story. Until then, stay sharp, and I'll see you in the next one.